Well, it's time now for the business news. Stephen Carroll joins me in the studio. Stephen, good morning to you.
Hello, Michelle.
Now, the Greek Prime Minister Alexis Tsipras, meeting with Merkel. Tell us what we can expect.
Well, there's a letter written by the Greek leader that's really set the tone for this meeting. It's been obtained by the Financial Times. They've published extracts of it in their newspaper today. And in it, the Greek leader says that Greece is facing an impossible situation when it comes to its debts this year. He details the cash crisis his government is suffering from at the moment, directing particular criticism at the European Central Bank for limiting the financing that's available to Greek banks. Now, he says that Greece will be forced to choose from making payments on its loans or paying wages in the public sector. This is one extract from the letter in which he says servicing those repayments to the resources that Greece had would lead to a sharp deterioration in the already depressed Greek social economy, a prospect he says that he won't countenance. That really is setting out that position that we can expect Alexis Tsipras to lay out to Angela Merkel later today as well.
But what kind of help do we imagine that Tsipras is expecting from Germany?
Well, Germany, of course, is very important in this situation because it's the biggest contributor to Greece's bailout. We know they've taken a very strong position in negotiations thus far. Greece, of course, expecting that 4-month extension to its bailout. But to do that, it needs to hand over a list of economic reforms to show that it's serious about reforming its economy. And in exchange, it's hoping to get that 7.2 billion euros that's left in its bailout fund. It needs that money as a matter of urgency, and that's because the tax revenues that Greece is receiving have fallen. Its banks, of course, as we know, are short of cash as well. It's going to need money for those as well. It also has more debt deadlines looming. The next payment it needs to make to the International Monetary Fund is on the 9th of April. That's some 470 million euros almost that it needs to make that payment. So that cash crisis is ever looming. With Greece, we know that there's a problem as well with savers taking their monies out of the Greek banks. More than 1.5 billion euros was taken out last week alone. If those banks need money urgently, they're going to have to call on the Greek government, and the Greece simply does not have that money to pay over. So a potential other looming crisis there, and that's what we can expect Alexis Tsipras to be telling Angela Merkel later.
OK, so some tough talks there kicking off a little later, Stephen. All right, tell us what's happening on the markets then.
Well, it's been a pretty good start to the week in Asia. This after a strong finish on Wall Street on Friday. Central banks really have been dominating the markets in recent weeks. This speculation over whether or not the Federal Reserve will raise interest rates and when that might happen had been moving markets. But you can see some optimism that that's a little bit far away on the Asian markets today. Japan's Nikkei up almost 1% and the Shanghai Composite too seeing some gains.
Well, staying in Asia and the fall in tourists coming to Hong Kong from mainland China.
Yeah, and that's really having quite an impact on Hong Kong's economy too. This after the recent protests against the influence of Beijing on Hong Kong's leadership. It's a big worry for many retailers in the port city, as Charles Pellegrin now explains.
Get rid of Chinese barbarians. The inflammatory message is brandished high on this banner and targets mainland parallel traders, people who buy household goods in Hong Kong to sell at a higher price in mainland China, causing shortages of essentials such as milk powder. In recent weeks, protests like these have turned violent, adding to the tension between Hong Kong and mainland China that arose with the pro-democracy protests. Mainland tourists like Wendy Ma are getting worried. She's started looking at other destinations for her shopping holidays, like Japan or Paris.
Yes, of course I'm scared of the protesters. I mean, it's not the government's fault. Hong Kongers are very disruptive.
In early March, tour groups visiting Hong Kong from the mainland dropped 80%. And with 47 million Chinese visitors last year, a slowdown in the tourism industry could be damaging.
I think the impact could be pretty substantial. So based on the estimates, about 40% of the Hong Kong retail market is actually driven by mainland tourists.
In the port city, a struggling retail sector could impact other industries as well. Forecasts for Hong Kong's economy this year have been revised from 2.4% to 1.6%. Meanwhile, the number of Chinese visitors to Japan has tripled in February, in spite of the conflicted relationship between the two countries.
OK, Stephen, thanks for keeping us up to date with all the business news this morning.